Hey, good morning. It's Patricia Murphy. It's Wednesday. This is Seattle Now. 2 years ago, state lawmakers created what would have been a first-in-the-nation social insurance program to help Washingtonians pay for long-term health care. But just 2 weeks before it was about to start, Governor Inslee hit pause, and now the legislature will have to fix it. KUOW's Olympia correspondent Austin Jenkins will give us the details in a minute. But first, some headlines. The Omicron variant has the University of Washington starting its winter quarter online. In a note to students and staff on Tuesday, the UW says it hopes a week of remote classes will stave off a spike in cases. Clinical instruction and practicums will still meet in person, and housing and student services will stay open at all 3 campuses. For now, the plan is to pick back up with in-person classes on January 10th. First Buffalo, then Boston. Now Starbucks workers at the Broadway and Denny's store on Capitol Hill have filed for a union election. Workers there told the Seattle Times they've been inspired by seeing other stores do the same and mentioned wanting a bigger voice in how the company has responded to the pandemic, among other issues. A Starbucks VP wrote to employees on Monday that the company's position hasn't changed, saying, "From the beginning, we've been clear in our belief that we do not want a union between us as partners." And hope you had a pleasant winter solstice. We are back to adding daylight as of today. As for the snow people are talking about, National Weather Service says the latest forecast has less precipitation in it. So while we're in for colder weather over the weekend, there's no big storm on the way. Seattle metro area could see 1 to 2 inches, but that's spread out over Saturday, Sunday, and Monday.
I'm very proud to stand here today and to say congratulations to Washington State, not just for being first in the nation, but for being a state that's going to make sure people no longer have to spend themselves into poverty before they can get care.
In 2019, the Washington State Legislature passed a new long-term care benefit called KUOW Cares. It's meant to kick in when people need assistance with at least 3 activities.
In-home help if you need help with bathing or toileting or even getting a meal on the table. It also could mean nursing home care if you needed that level of care. It could mean changes to your home to make it more accessible to your needs.
That's Northwest News Network's Austin Jenkins. Funding for the benefit was set up to come out of Washingtonians' paychecks in January. 58 cents for every $100 earned. About $435 a year for someone who earns $75,000. But a lot has changed since this bill passed in 2019. Last week, Governor Jay Inslee hit pause on those plans so a state commission can work on some adjustments. Austin Jenkins explains what the designers of the program were hoping to achieve.
The idea was that 7 in 10 Washingtonians over the age of 65 are expected to need some form of long-term services and supports within their lifetimes, and that at this point about 90% of people don't have any savings for this.
How does the program work from there?
In order to fund this program, you have to have a bunch of people pay into it for some period of time before you can launch the benefit. So the idea was that that would start this January, and then in 2025, the program, the benefit would begin, and that eligible workers would qualify for just under $40,000 total in benefits, which frankly isn't a lot of money when you think about the cost of long-term care. But the thought is that for most people, that would probably be sufficient. And again, the theory here is that this is a social insurance program that ideally is serving people who A, can't afford or don't have private long-term care insurance, and B, previously might have had to spend down their life savings in order to qualify for Medicaid in order to get long-term care. So in some sense, what you would hear from advocates is that this program is designed to fill what might be described as a missing middle.
Sure. There was a lot of anticipation around the start of this deduction in January, but as we talked about, Governor Inslee put everything on hold. I am curious what changed.
Well, what changed is that Senate Democratic leadership sent the governor a letter earlier this month saying, hit the pause button. And they had several reasons for wanting a delay of game, including the fact that the timing of this new tax is in the midst of a pandemic, which when they passed this into law in 2019, that wasn't contemplated. But there's also a whole host of concerns about how this program is going to work, and A, whether it's solvent over the long term, and B, what to do about people who will have to pay in but for one reason or another won't qualify for the benefit. In part because it's not portable. You can't take it with you if you leave the state, for instance. And so, I think what was going on is that Democrats were looking ahead to the 2022 elections. They were seeing that this program has a lot of critics, and they were getting a lot of calls, constituent calls about it. And they thought to themselves, it might be prudent to just take a pause here and try to make some fixes before we start taxing people.
Yeah, and you can see where a program like this can address a large need, but the details are very difficult to suss out. What are some of the things we're talking about that need adjustment?
There are several that are likely to be considered. Many of them are based on recommendations from the state's Long-Term Care Commission, which is overseeing this program. And they include, for instance, addressing the fact that people who work here in Washington but live in a border state like Oregon are currently on the hook to pay the premium but not benefit from the program because only Washington residents qualify. Another problem that lawmakers are likely to address during the 2022 session is that workers who are nearing retirement won't have enough time to vest in the program and therefore won't qualify for any benefits even though they would pay in their final working years. Lawmakers are also expected to want to address eligibility concerns for disabled veterans, military spouses, and people who are working in Washington under temporary non-immigrant visas. A likely solution is to let a lot of these workers, as well as the out-of-state residents, simply opt out of the program. For those approaching retirement, you could allow them to opt out. You could also allow them to keep paying in even after they retire.
And then there's the other issue, which is nearly 500,000 people chose to opt out of this WACARES program by buying their own private long-term care insurance that they are now paying for. Now that this program is paused for the moment, what happens to them?
Yeah, this is a really good question. First off, that's more people than they thought might opt out, less than kind of a worst-case scenario. But the reality is that these tend to be higher wage earners, wealthier Washingtonians, and so they represent more than a third of the state's wages, and they have left the program. So one thing that they have to do is take another look at the long-term solvency of the program and see how those opt-outs affect that. And will the tax that is going to be assessed be enough? As for the people who bought private health and private long-term care insurance, there's no mandate that they keep it, so they can drop it. In fact, part of the reason why the private long-term care insurance market sort of seized up prior to the November 1st opt-out deadline is because so many people were interested and the industry was worried that a lot of people were just looking to buy the cheapest product possible, get out of the state program, and then drop their coverage. So I'm seeing a lot of comments online from people saying, hey, I feel like the rug's been pulled out from under me here. I bought these plans and now you're not going to charge the tax. But again, there's nothing that's going to force them to keep paying the premiums. Many may choose to because they may feel like this is a benefit that they want to have and it's worth it to them to pay for that insurance.
Well, I'm glad you brought that part up because the reality of people not being prepared for the later years of their life has consequences. We are living longer, but that doesn't mean we're necessarily living stronger. And like you said in the beginning, 7 out of 10 people are estimated to need this kind of care.
And this private market has been mostly inaccessible and unreachable for most people because the insurance plans you can buy are so expensive, or the benefit, you do the cost-benefit analysis and it's just not worth it. There's been some talk that maybe by having a state-level program, then the private insurers would create kind of an add-on or supplemental plan that people could purchase that would be more affordable, sort of like Medicare Plus. No guarantee of that. But really, in many ways, what the sponsors and backers of this were thinking is that the private insurance market isn't getting the job done. It's really only for wealthier people. And so a state program that reaches all of the individuals who don't have this kind of insurance might be the right solution.
Austin, what are you hearing from Republicans about WACARES?
They don't like it. What's interesting is when this bill was first introduced, it was actually done so in bipartisan fashion. It introduced in 2017, didn't pass, reintroduced, and it did pass in 2019. what Republicans are saying, for instance, Representative Joe Schmick, who's the ranking Republican on the House Healthcare and Wellness Committee, he said he's glad that there's a pause in this program, and he's saying it's a good time to take another look at this proposal. He says we now have a chance to go back to the drawing board, but that he would prefer that it be repealed. And, realistically, that's not going to happen as long as Democrats are in charge in the legislature. But there's definitely Republican criticism of how this is working and a push by many Republicans to just take this off the books altogether.
It's interesting you said this started out as a bipartisan idea. I wonder what we can learn from how this whole thing unfolded here. No good deed goes unpunished. Like, what is the greater truth here?
Well, or to paraphrase Star Trek, this is a case of the state going where no state has gone before. It's a first in the nation plan. And it's fraught to be, the first at anything. You don't know where you're headed or what bumps in the road you will encounter. I think, the sponsors are learning that complicated public policy often needs revisions, that, good intentions can come back to bite you a bit, and again, timing is everything. So when they passed this, we were in different times, and that imposing a new tax in the midst of a pandemic when we're talking a lot about inflation is not good politics. It's also hard, Patricia, to convince people at age 30 or 40 of a need they may have at age 85. And the other problem is, how do you structure a social insurance program that allows some people to opt out, but not so many that you undermine the solvency of the program? Sort of what's that sweet spot look like?
Yeah, all great questions. Austin, what is next?
So the legislature will reconvene in January, and they'll get to work on changes to the program, but also they need to formally delay the program because the governor didn't do that. All the governor did is instruct the Employment Security Department to not collect the premiums from the employers until April. He can't even tell the employers not to collect the premiums because that's in state statute. They are encouraging employers to not do that. But really, the legislature needs to come in and say this is a delay of game in statute. And what we're hearing is that they will likely delay the premium until the spring of 2023. So not even January of next year, but maybe April of the next year. So that's kind of in the works is this delay and fixes to the program. But meanwhile, what we're already hearing is that state agencies, because this is still in statute, are going to start deducting the insurance premium from paychecks starting January 1st. And so then there may also need to be, on the part of the legislature, some sort of refund program.
It always gets so complicated.
Doesn't it, though?
Yes, it really does. Northwest News Network's Austin Jenkins, thanks so much for explaining this. Really appreciate your time.
You're welcome.
Thanks for listening. Caroline Chamberlain Gomez produced today's show, which is also made by Diana Opong, Clare McGrane, Jenny Cecil Moore, and Jason Pagano. Matt Jorgensen does our theme music. I'm Patricia Murphy. Everything you hear in this podcast is made possible by you. And we have so many ideas for 2022. If you want to hear more voices, more fact checks, and more questions answered, and more podcasts, then please make a special year-end gift to keep vital information flowing in the new year. You can donate online at KUOW.org, and thanks.